It's good to see you at least after very long. Earlier, we used to bump around in the same hallway. Uh,
And hopefully soon. Hopefully we'll do that soon. But yeah, but pata nahi, I think new strain of virus and all. I think I don't know what. Too much unpredictable.
totally.
So time to begin. Welcome everyone to the fifth edition of our webinar series. And in this edition is going to be very special. We've got two of the biggest thought leaders in the BFI sector with us today, and we're going to talk about something really interesting today. We're going to talk about how investments can be driven through technology, right? If you have had the chance to look at how 2021 went, apart from COVID, you will see the young or the Generation Z or the millennials, as they call them, have been investing much more than those before them, right? Including me. I've been investing a lot of money in a lot of different places, be it mutual funds, be it a share market, NSE, BSE, doesn't matter. So I've been investing a lot. And even if you look at the market as a whole, that has actually increased by 30%, right? And so today, we are going to talk about a specific topic. We're going to talk about how technology and how digital or digitization can help you in your business to drive investment from Generation Z. So to talk about that, we have Gaurang Sanghvi. He's the head of digital for DSP Mutual Funds with more than 10 years of experience. I would say, again, he's one of the industry leaders when it comes to talking about digitization in the banking and BFSI sector specifically. Then we have our CEO Ankit Ratan. He is a stalwart when it comes to technology. He built his own company before Signzy. Right now, he leads Signzy as its CEO. As you might know, we are a AI-driven, no-code AI-driven platform for BFSI sector work for customer onboarding. So, without taking out much of your time, I'm going to just pass this on to Ankit to move this forward, and hope all of us get something out of this and have a good session. Ankit, over to you.
Yeah, thank you, Vijay. And also, I think over generous for me at least. I think Gaurang is thought leader. So, I mean, but yeah, I can understand like you have to work with me. So that's totally good brownie point. So Gaurang, I also actually hadn't seen your profile before this. I spent some time going through your profile as well. So for a lot of people here, I think one thing probably people generally want to know how did you get here, right? And I think your profile is very interesting. You started with FMCG, became an investor, then started your own company in financial domain, and then have stuck, I think, with financial domain. So, I mean, talk a little bit more about your story and any interesting, some of these, I think, pivots you made were very interesting. So if you can talk about them, would be great for the audience to at least know.
No, thank you so much. So I think I'm perhaps the worst HR person's nightmare when they see my CV, where they just take a long time to count the number of organizations I've been part of. So it has a blessing and a disguise, both in the same. But I think from a career perspective, I think we try to over-engineer it, and I think later on we realize that honestly you just have to go with the flow. And I think what I followed was, and this is one of my uncle's advice at early on, that he said divide your career like, and he does believe in the shastras and so on and so forth. So he said divide your career into 4 parts. First 10 years, your only job is to learn. It's the toddler year, right? The way we divide our life in the first 25 years as a student, then we have a working professional, then something that you have to give back to society, and then eventually it's only for yourself. I think he divided it in similar fashions that first 10 years only learn, next 10 years wait to execute, post that in your 40s work to help others come along in the journey, and then the last is to help the whole industry overall. And I thought it was a very interesting way, in a very lucid way, to divide your careers in 10. I'm only 15 years in to that, but a couple of interesting things, right? Started as consulting, realized consulting is not the giving advice is easy, actually execution is hard. So then I went into FMC, like private equity, and then FMCG for a bit to actually execute. And it was my second stint of private equity. I realized that this investment is also giving advice with money, which is great. But it's still eventually version of giving advice, right? And I said, one second, there is much more to be done before you do that. And I chose a sector. And this is 2013 and early 2014 that I realized that technology is inherently changing finance the way it is never done before. While I think people think finance is not very tech oriented, but on the contrary, finance industry is actually the most tech oriented industry out there. Right? It goes in the BFSI spends, but it more importantly, like credit card is actually a technology innovation, which we don't give enough. This thing, and we assume it's a physical device, but it's nothing but that. Right?
Like most of like just to give an anecdote also, many times in our sales pitch we always use this term that in e-commerce Amazon is still transporting a physical product through a physical truck, but money by definition has been theoretical and hence digital, right, on day one, right? It has been, as you correctly said, right, on day one it is a complete field for technology to change and mold whatever it wants to do. There's no physical truck, there's no physical product.
Oh, absolutely. And perhaps it's the only industry where trust is translated, right? So what we are doing in nothing in financial services is exchanging trust with each other, right? That's what exactly we believe, that there is a bill, a 100 rupee bill, or tomorrow it will be a Bitcoin, and it's a larger debate around the same. But it is exchange of trust that works around the same. And when you start using interesting ways to enhance the trust on using a technology, it actually makes it actually grow much more than otherwise, right? So we assume the technology and trust don't go together. It actually is that business that what we are in. So I think that's been the anecdote around the same, and I've stuck around in the fintech domain. I think it should be more called techfin now, but that's a terminology context. But I think they're sitting in perhaps the most interesting 5 years that every other industry is going to get touch point through financial services. And then obviously onboarding becomes your first touch point, right? It's the first experience that most customers will have to most products. So the joke that, I sometimes say that like platforms like Signzy is actually at the forefront of it. It's like the first warriors that we send in this thing, right? The battle soldiers that we used to do. And if you win that war, there's a higher chance that you will win. So if you win the hand-to-hand combat better, there's a bigger chance that you will win the pie, and that's why we have partners like yourself to win the war as such.
No, thank you so much for that, and I think we'll go a little bit more deeper on that during the discussion. But I assume you're not a branch person. Like I think the big debate I think in financial services is branch, and so what is your views on that debate?
See, I think we're assuming banking was for everyone, right? That's how banking had to organize it. So that's why they had one financial product, right? एक savings account. उसमें चलो थोड़ा reward डाल दिया, थोड़ा इधर उधर कर दिया. That was just one way. Unfortunately, banking had to design for all. And users are not all, right? All of us come from our socio-economic context, our education, our preferences, and our fears. So if you ask me, even being in financial services, I'm still scared to enter a bank. And I'm talking about like the big banks. I'm not even talking on SBI. SBI to makes you feel that you're in some, you've gone 20 years or 40 years behind in life. But branches do solve a real problem, right? For people who have lack of trust, which happens when your income levels are low, right? Or people who cannot understand education, branches has a real value to solve. Now, branch can shift from 1,000 square feet for 100 square feet or to a pawn shop, right? That's a context of changing the mechanism. But I don't believe that the question is or, it will always be a question of and.
Okay.
And it's basically, you don't need large urban expensive real estate, right? What you want is that you want to be in, let's say, 30,000 villages that you are available at an existing shop as a banking service. So I think, the definition of branch changes, but the fact that it should service to the different segment sets. And that's why I believe the neobank will solve a problem for a very high education, high demand audience, right? Right.
And no, I think an extremely fair point that we have only lived in a branch world, right? Like your top end customer who's probably at the most lower end has to go to a branch. In fact, if you look at RBI's way of financial inclusion, it's defined by a branch, right? That does branch exist in this, does a bank branch exist in this pin code defines how financial inclusion is. So I think what you're saying is that, I mean, that will change, right? So what you're saying is branches would exist for certain people, but it's no longer only about branches. That's the message uh, I think I'm getting. And from that, maybe talking more about, investment as a sector. I think we have seen this over the last 10 years, right? Like, I mean, Zerodha became the largest broker over the last decade. I mean, definitely investment has been at the forefront. The biggest financial organizations in terms of names have not been be able to even be competitive with some of these digital only organizations. So talk us a little bit about that. Like, why did that happen specifically investment, not in other sectors as much?
See, perhaps the reason it would have happened because investment is a need as well as a push product, right? So we feel the need because we want to beat inflation. We also want to grow our wealth, right? That's the need from the user perspective. But also it needs to be sold to you because financial products are not simply defined, right? I would love to go to an AMC which has only 3 products to choose from, right? And that doesn't have anything else to offer, but it has an offer to long-term investment, right? Which does not entail to service every customer and every need of theirs, right? Now, but in reality, we have to service multiple formats so that you can build a large enough business model around the same. Now, given where we are, I think I think 2020 to 2030 is going to be the golden age for investment in insurance.
Okay.
Perhaps like we have never seen before, right? Because banking is a problem we have solved for, right? With Jandhan, we've at least insured everybody as an account. Over time, people who have account and people who are getting money and basically any form of circulation that will happen, lending products will get adapted automatically to it, right? We don't need to do exceptionally large amount of innovation beyond the current risk assessment or collection innovation that's already happened. I think the next leg of innovation is simplicity and convenience as well as commitment, right? And commitment comes from both sides. If those three can be digitalized, I think insurance and investments will become the next big sectors that unlocking, especially in the digital way, because here you don't need transactional. I don't need a branch for any reason, right? Or I don't even need an ATM for a context to it. What it needs to solve for is my need to manage my risk, which is insurance, and need to manage my wealth, which is long-term wealth creation. And anybody who can do this digitally will happen. And I think post-COVID, we've seen our business grow dramatically online. And I think it's just the tip of the iceberg what's going to come in the next 10 years around the same.
And I'll put you a little bit on the mat on this one. So, I mean, the next decade is golden, but do you see the new age tech challengers beating the larger known names, and also maybe as a part of it, what changes are some of the larger known names doing so that they still remain competitive? Like, what do they need to do to be relevant?
So I think you cannot discount the top 5, 10 mutual fund houses because they're household brands and they have built the distribution which will serve them, right? Is the distribution cost effective? That's a different debate altogether, but they have it already existed, and to replicate it is very hard, even digitally. It comes at a cost, right? But I think what's going to happen in this next decade, especially with the new SEBI norm opening up of the license of an AMC for any startup, in a sense, right? You don't need now 100 crore net worth. Unlike insurance, which you need 200 crores approximately to go build an insurance company. Here you will have an unboxing, in my view, that the majority of the growth might shift to these new age platforms.
Okay.
Right? I'm not saying that there will not be any growth to the existing players, but you will miss out on the larger business that's going to get unlocked as such, right? Because they will be completely digital, they will be completely simpler products, as well as they would have built nudges that allow you to invest for the long term, right? And it is not a trading website, which some most investors treat even their mutual fund investment as a trading context, right? कि आज market चढ़ गया तो invest करो, जब गिर जाएगा तब निकाल देते हैं, right? It's completely the opposite of what mutual fund needs to be. It needs to be long-term investment partner to you. So that is one side of the story. What can large players do? I think one, we have to be very honest to ourselves that what are we here for? In mutual fund, we are in the mindset of constant selling, where the customer does not want to be sold to at all. We cannot be the banker to them, right? What we need to be is somebody who simplifies the journey of investment as well as the commitment it takes to it, right? So classic examples, compounding only works with habit and patience, right? And as mutual fund houses, the minute you accept that that's the only role I have to play and nothing else, you can then design interesting risk assessment journeys, interesting sales tools that can explain a story than simply saying I'll give the best transaction history or the transaction journey, because I think that is just a given, right? That is given that you need to have the best onboarding journey, the best.
Yeah, that's hygiene.
That's literally hygiene. You're not building anything unique,
Yeah,
and
that's
we're still struggling there, right? So if you can't struggle, go beyond that, then you're really not going to build that innovation layer that's needed around the same.
And I think you touched upon that briefly. I mean, people are choosing between mutual funds, trading stock themselves, right? And I mean, now also there are interesting models of advice, right? I was seeing this ad of an app where you can follow other investors' portfolio, and I mean, they get some percentage cut of that. So all these. So any thoughts on this huge change where I think mutual funds is even for very retail customers, right? Less informed retail customers is only an option. It's no longer the way to invest in stocks.
No, I think so that's actually great, right? Because the more you're given choices, the fact that you have put more potential to experiment and figure out what works for you. The opportunity that exists for mutual fund is that this is the simplest way to get there. Because if you look at it, right, you really don't know the cost structures of other products, right? And how they are priced around. The good part of mutual fund is it's a predefined price structure. So at least you know what you're buying into, right? Indirect or through a broker. Are completely contrary to saying, let's say I'm doing stock trading for somebody else app that you're describing. It can happen with your gambling money, right? I think everybody should have a gambling money that you should define. It is nothing wrong. Humans have the inherent assumption that we are better at it than somebody else, right? It's like, if I can put, the male ego exists in all humans, right? That, and the thrill that it gives. And I think it's very important, right? There's nothing wrong to go to the casino once in a while with a very little amount of money, right? You want to have a game. Why does Tash happen during Diwali? For the same reason, right? So keep your gambling money for other reasons, but hopefully majority or all of your other money is for long-term investing. And then choose if stocks are your method or mutual fund or a combination of them.
And I mean, interesting you put that as well, right? Like there are some behavioral traits, right? You put it as male ego. I had a really, a little bit sexist point to make that. I mean, then mutual funds should target females more, right? Like you'll get far more of their wallets. But on a more serious note, I think some of these behavioral traits, right? Like, and uh, we were talking about technology. Are you seeing players using technology for even behavioral nudges, for behavioral assessments, or are we still very far away from there?
No, I think this is the right time to build behavior-based tools, right? So if you think about it, if I don't understand you inherently or who you are, then I cannot give you the right advice, even digitally or through a human context, right? So that's what, traditionally, what have we done? We have shifted the bank manager to a app, right? Instead of the bank manager asking you कि अच्छा आपका business कैसा है, cash flow कैसा है, now this is digitalized, right? I pull in records from your call, bank statements and analyze this. The same thing is going to happen to that. The advisor has a big and important role, but you can digitalize that journey. So to make it streamlined, at the same time, enable personalization and take away bias, right? Now the question is, how do you do it? Now, doing it the traditional way is wrong. Saying, I will ask you, acha, aapka risk meter kya hai? Now, a human doesn't know his risk meter, right? Otherwise, he would have figured it out. What you want to give him is similar like situations to saying, acha, ye ho jata to aap kya karte? Right? So understanding what the actual action would have been and take their personal bias out and then make a judgment. So I think the next 5 years are all going to be about risk understanding of the investor, showing him the right product or nudging him the right way to not redeem or exit before his particular goal has been defined in whichever fashion, right? Wealth is a goal also. We don't like to, in India, we don't like to talk about it. हाँ मेरे को गाड़ी खरीदनी है, घर खरीदना है, but they're all indicators of wealth. as such.
Yeah, no, I mean, again, yeah, interesting point, right? Like this is also behavioral, right? Somebody, you say that, if you invest in stocks, you can save for a house, he may. Instead, if you say you'll grow your money by 12%, he would be like, okay, I mean, I don't really understand what this means. So, yeah, again, I think even targeting or your nudge is behavioral, right? Like you study how this person would react and then you nudge him. And like a related question to that, like, of course, I mean, while we're talking these big stuff today, if you talk about what's on the ground, as you said, right, we're just selling, right? Financial services. I get at least, I think, 50 mails a day or something in my inbox about products I already have, products, I never want, etc. On the ground, I think people, as you correctly said, advisors have been managing this for a while. Do you think that there needs to be some role of an advisor intervening, right? I think you've gone from there's an alternative advisor and app, like at least in this mid phase. What do you foresee? Do you foresee a more advisor plus technology kind of nudging that can be done today?
So I think, we have to bring the human back into the world of mathematics, right? Or because it's eventually finance is maths, right? And once you are able to bring the human, and you can't eliminate the human as such. So both are not possible, right? If we assume that tomorrow there will not be an advisor, I don't think we're in that stage of mind or even that evolution, because we forget money is emotional. It is not rational. So when something is not rational, it requires another human to rationalize it for
Yeah,
you, right?
and going to a point of trust, right? I mean, like I have a great Apple laptop. I'll not trust the laptop. Technology, impossible to trust technology.
No, so you can put the human back into. So, for example, what Apple does, right? Let's take a simple example. The context of a bar that you can swipe left and right. Now, I don't understand why Windows is not built such a simple innovation, right? Where I can, in my own computer, shift in screen with the concept of a touch bar context. For some of those people in Windows might not even understand what I'm talking about. It's literally like the left and right screen where you can have multiple screens was always available on a MacBook. And it's, I think, perhaps the best feature of the computer, if you ask me. So same way, you have to bring in human elements into technology. And let's take an example here, right? How can you ask the right question at the right time and nudge the person as if they're talking to a human and not to a system? But that doesn't mean that I can eliminate the need. So I'll be very frank here, right? I have some of my money which is invested directly, and some of my money that is invested through an advisor. Now I can tell you, to be in pure honesty, the only money that I did not exit from in the cycle, in this massive roller coaster that we went through, was the money with my advisor. And it was not because of anything, because I had a commitment that I had done before starting, because my advisor made me do this, right? How long is your money going to be? Will you ask me for your money back? And I had guaranteed saying, nahi, nahi, nahi. ये पैसा मैं कभी नहीं पूछूंगा आपसे, right? And I still asked her for a little bit for my home loan, and that's a different question. But that is the only money I didn't touch. I can tell you, being in the industry, I went through the emotions of market cycles, and the trader in me also woke up, right? So I sold my mutual funds in the middle, in the fear of, and in the fear, as well as the attitude that I am the smarter one, I'll make better returns. I never got to invest in the bottom, and I struggled to rationalize that part. So there is a plus and minus. So I think you should have all options, right? The money that you know that you will take away, give it to an advisor. That 1% is worth the cost. But part of the money that that you can grow and have the discipline, you keep that as well.
No, interesting. And I think while we are on that topic, right, one of the most painful things where people were also involved was onboarding customers, right? A lot of paperwork, a lot of people, and so I think as you said, right, there are parts where people are important. There are also parts where people should not have been there. These were not jobs where people were putting any emotions or were adding any value, right? So can you talk a little bit more about that problems that we had faced in onboarding? I mean, your organization or in general the industry, and how that has changed, over the course of last 2-3 years.
No, absolutely. So I think we were just lucky at our fund that we were able to partner with y'all just at the right time. I remember we started our conversation in November. By December, we had done our first integration. By Jan first week, we were live. Right? It was a fairly quick. And in hindsight, that was the thing, perhaps the best decision we had made, right? Because earlier we used to have a very clunky system where we had only a 4 to 5% conversion rate.
Oh.
And people don't talk about the cost of marketing that customer to get them, right? The whole engine of mutual fund is to attract new customers, right? And that's where the growth opportunity is, right? Obviously, part of it also goes into rebranding or letting others know about your brand. But if, as an industry, we want to grow, we have to bring many more people into the the whole DMAT through or CAMPS approved KRA system, right? Now, it is very essential to build a seamless system, even if the investor decides to go invest somewhere else. Because it's like simply saying, right? If you get your ICICI as your first debit card and you move to HDFC, you will still do some business with ICICI at some point,
Yeah,
right?
that's good.
Right. So you have to look at it from a longer tail perspective and not only conversion perspective. But I think we were very lucky to have you all. And I think one of the things that people don't understand, that onboarding can bring you alternate business, right? And perhaps I won't name the partner, but this partner is one of the largest partners in the UPI space and beyond. And because of us using a particular gateway, right? Because you all are nothing but a gateway of onboarding, we were able to access them as a client and as a partner, and that ecosystem growth is unlike that's going to happen anywhere else, right? Because the onboarding is seamless now, not just on my website but in other partner websites, that I can now get more pie of the share, which some of our competition might not be able to. So I think it's essential to not just look at a pipe only for you, but helping the industry overall. And I think that shift needs to happen for some of the larger players as well.
And I think you make a very good point, right? Like, I think frictionless experience of acquiring products is not just needed, as you said, right, for your own customer. If you do that, then you can plug into so many other journeys where your partner, all he is looking for is that you're acquiring customer journeys frictionless, right? Their only definition is that you should have a frictionless journey. My customer should not, face this huge UI UX. So, like talking a little bit more about that and going a little bit deeper into that as well. Uh, like you said, your conversion rate was 4 to 5%. How are you seeing business metrics, right? Like, so one can be conversion rate. What is the growth in business due to something as simple as making acquisition frictionless?
So it has multiple advantage, but the clear advantage is that you're able to lower or justify your marketing cost today, right?
Mm.
That's your CAC now suddenly looks very different
Oh.
because you're able to convert many more customers and not a significant, right? We went 6 times up and in our journey, and it was not what it wasn't that it wasn't one partner giving all the requirements, right? From our side, we basically gave enough feedback to the team as well and able to make those adjustments as we started seeing how to improve the product. So I don't think it is not a one side win. It needs to be both sides traffic for it to overall become better. And once that happened, what it gives you is complete confidence and peace of mind as business owners, right? Saying that I have not just built a better customer acquisition journey, hence my cost of acquisition is lower, but I've also built a journey to retarget my existing customers, because there will be drop offs, right?
Yeah.
Customers start it and they don't end up finishing it. How do you ensure that you're constantly working with them to improve that matrix from an onboarding perspective? And the third matrix that I look at, it also converted to invested, right? How many people actually started the journey with us? Because that's the only thing that I can again track. So there are three different things that you would want to do, right? How many people you're able to bring in to the funnel? How do you better convert the funnel and make it more streamlined? And third being, how many of them actually end up investing or taking part of your financial product journey that you've intended to build out?
Yeah, no, I think that is again, I think you put it really well, right? Like, and the same thing should apply to other industries. That once you acquire the customer, your job is not done, right? You still need to kind of engage with the customers for cross sell and upsell. Maybe investment is unique where you need his money, but yeah, I think other industries also need to learn a lot. So I think talking about a little bit because I think in general you while you are today in wealth, I think you do have the breadth to understand other sectors as well. So, talking a little bit about other sectors, right? So, one of the challenges, big, which I think is looming, is that consumer tech versus finance. Earlier, it used to be fintech versus traditional financial services, which I think traditional financial services won quite comprehensively. What do you think about this new emerging battle of consumer tech, or is it a battle at all?
No, it is. I think this is now the true battle. Till now, because the regulation is behind traditional financial services, you cannot take the avenue away from it, right? And if you ask me, I have my serious views on P2P and all of that, saying we will transform banking. Honestly, you would not, because you really don't understand risk assessment to the core of it, right? Just because you're transferring money, you're forgetting the bank's job is risk assessment. It is nothing else at the core of it, right? And people have misunderstood that. But if you ask me, today they're sitting of any player that has built a full stack of financial services. Let's take lending, right? SME lending. In my view, tomorrow you will be competing with other platforms that were purely. So, for example, the best example is Tally can become the best SME lender in the country, right? Or perhaps the largest, right? It's just a matter of time. Or payment gateways.
Yeah.
So you'll have fintechs fighting with fintechs, which was never assumed to be, right? In my view, traditional use cases will win versus pure value services. Because if you're building value, you are saying, okay, I've built the best acquisition engine, but I still have to acquire them without a use case, right? There's no reason to exist in customer lifecycle. I built the best risk assessment, best collection. But that's not good enough, right? Because tomorrow customers will ask for lower prices and faster conversion. And that can only happen if I have a true use case. So if you ask me, Pagar Book Pagar Book has the potential to become the largest EMI provider, or buy now pay later, because you have the history of the salary for a class that never existed that you could have approached to, right? So I think we're sitting on a very interesting time that everyone will be competing for the same customer pie in and providing almost the same services. Then who wins? Then pricing wins, right? And pricing will happen with better acquisition or better risk assessment.
And so there are two choices to be made. So as a bank, what would be your advice to, like, should you go after acquisition? And if you have to go after it, I mean, what do you do? Or do you still just hold on to risk assessment and start partnering with consumer tech?
No, so I think banks have to understand that they have to continue to build use cases. We forget that bank is actually one of the best use case, right? When you build a store value, it is nothing but मैं अपने मतलब कवर्ड से आपको पैसा देने लग गया ना, because you provide me convenience, you provide me automatic interest, you do enable use cases to happen, right? My payroll could happen from there, or my payments could happen to other people seamlessly. I think the traditional banks will have to build even more use cases to go forward. So if you ask me, if some consumer bank wants to be the most known in the student community, it will have to build the most amazing splitting feature, right? Because that's the need of that segment. If it's for new to job, right, then it has to give me a better understanding of my payroll, because I don't understand मेरा payslip कैसे होता है, taxation कैसे होती है, all that journey of what my early journey of a job is, right? The same way it has to then service different needs for it. So I think banks will have to become use case creators or partner with use case, depending on the strategy of the bank, right? But banks have a beautiful opportunity to open that. And I think BaaS, or banking as a service, is going to get the most interesting times, because whoever can do that will actually acquire way larger customers on somebody else's expense. And then the value is that to cross sell everything else that the bank sells, right? So that's one side of the journey around for the same. But for consumer tech who have the customer segment and now can partner with an existing bank or an interface, like for example, I see a lot of avenue for a company like Setu, or there's another one, couple of them that have also become Y Combinator startups, right? Decoded or something like that, where they're basically bringing all of the banking services into one play and enabling consumer tech or any tech company to integrate with the banking product but seamlessly, right? Placid is a US example for it. I think those are going to become very important and essential service. It's like building the infrastructure pipes.
And but do you see banks becoming so? I think one of the challenges is that the banks may also get commoditized, right? Or the products get commoditized. So What are your thoughts on that? And then do you think banks should themselves, for example, you took an example of Pagar Book. So should banks start building apps like that?
See it again. I think there's a lot of value to build solutions because banks are the closest to the customer and understanding of their needs, right? So there is nothing wrong for a banking partner to say hey listen, I'm going to put X amount of funds together and I'm going to hire product managers to build different products and experiment with each of them. I think we're sitting in a time that banks can take a bold view of doing it because they have the financial might to get there, right? They have the customer, they have the understanding of the need of the customer, and today technology is a commodity, to be very frank.
Yeah,
Right?
like building Pagar Book is of course not challenging for a banks. I think it's a question of focus. Like, should they start doing it? That is the I think question.
I I see no reason why should you not partner with some of these players to start with, to start at least changing your mindset.
Okay.
I think the challenge is that we have still had traditional technology teams heading digital teams in banks, right? What has happened is there have been existing bankers for 20 years who have now become digital heads at different banks. Perhaps you need to break that context, right? You hopefully want to get somebody from the commerce background or somebody from a different industry to come and start leading banking functions, and leave the traditional risk assessment to the expert, right?
Yeah.
In that bank around the same. So it's going to be a mix of it, but to not to build a team that innovates using digital products is perhaps the risk that banks have, and they just can't rely on the regulation forever. Or because if you look at what's happening in the US, Google just created its Google current account, right?
That's
Now, where in the world would you have ever imagined Google getting into your current account context? And this is just the start, right? Right? The same way Square building a financial services business was such a simple solution that a bank could have easily built, right? What did they do? They took their current POS and made it small and with an app, right? There is nothing that was the banking community couldn't have done in any of them. So while you should partner, I think you should also start building internal capabilities because you don't know where the next cycle of innovation is going to come from.
and I mean, like this is a topic that fascinates me as well. And so, do you think also the banks should collaborate, right? Because I think, as you said, if it's a battle between two giants, right, banks would still want to, let's say, have the power to price, right? They don't want to get commoditized. Like in this context of Google, right? Google will have all the power to price the product. So, do you think banks, should collaborate? And if yes, what could be the ways to collaborate on this?
So let me say the banks don't have an option but to collaborate, right? And we forget that banks have done a great job in collaborating with the corporate, right? They actually build all their wealth on the car side, right? Where they have collaborated with not one but multiple types of companies across the board and help them grow over the time. So I don't think that they don't lack the skills. It just requires focus, right? So you don't have an option but to co-create it with things, and some will work. And this is like the VC industry, right? 10 in this case, only things 7 out of 10 could work, or 5 out of 10 could work. It won't be 1 out of 50 companies that will work, but because you're just providing a pipe. So I think most banks will have to partner, and if you don't, you would miss out on a low cost of acquisition of customers, which requires you as a differentiation. And this might not apply to the top 1 or 2 banks, but it applies to all the challenger banks after.
And I think we are reaching to the end, and I think we'll start with questions. Also going a little bit back to, I think you talked about team and stuff like that, right? So I think there are a lot of differences and skills that are there between technology companies and banks, right? And I think banks are changing. I've seen a lot of product managers now, starting to come from non-traditional backgrounds, etc., etc. In spite of that, like, can you give like a high-level view of what are the kind of roles that banks still miss, and at least to some of the participants, if they're looking to get into banks, what can they do except giving bank exams, etc.
No. So I think the technology stack has changed completely. So they need people with alternate experience, right? One of what is happening today, right? The HDFC outage that recently happened, right? Now, if you ask that same thing to somebody working at AWS or Microsoft or even Amazon, there's a different way to solve that problem, right? Because they would have had uh, the teams as well as the cadence that it takes to solve a particular problem, right? So I think a couple of things that the banks will have to do. I think you'll have to change business heads to product heads, which is very hard to do, right? So think of it. So in our team, for example, we have a product head for KYC, right? And this is developers who become product heads. We didn't hire product managers, right? We've now started building every use case to be a product manager in our life cycle,
Okay.
right? And that's how we'll have to divide. So the whole organization over time will have to be driven from sales business heads, which is what business heads were, right? They were sales people who grew up empowering the troops, right? To saying, come, let's go do battle. To product managers who say, can I build a complete tech journey, no matter if I even have a physical sales team? And I am the head of a particular product or a particular function, right? And then I think they will have to heavily invest in data and data science, right? If my context is doesn't matter who you are. If you don't want to learn, not want to learn tech, don't learn it, but understand the fundamentals of data analysis and data science and visualization. Because I think the next journey is all about who's going to do this better than the rest. Next guy.
Yeah, no, I think very controversial thought. So good on that, Gaurang, on sales versus product. But uh, like it is a battle. So I think one thing I saw interesting is in US banks. I think this battle is in midway, right? So there are powerful product people in financial organizations now, and there are of course still very powerful salespeople even in organization which are tech salespeople are still very powerful. But I think banks have traditionally had very, very powerful salespeople. And I think in India, we are still, maybe far away from this battle. So I think good you put it out there. I think it is something I think we need to get around. Also, I think to summarize, I think the point that you are also making overall is that banks need to innovate. If sales is the most powerful organization in your company, means that innovation is not the core and innovation is not the focus. So I think what you're saying through multiple ways you're putting it, that banks to survive need to innovate, and it's no longer a choice to differentiate in the market. I think it is a way to stave off an imminent threat from these innovative consumer tech companies that want the pie or want the same thing that you wanted for years and years. So hopefully that was summarized well. And Vijay, I think you've come, so probably I'll hand it over to you.
Thank you.
Thank you, Gaurang. Thank you, Ankit. It was a wonderful session. And actually, I think this question has already been asked, but since it has been asked, I'll just repeat it. So the question is from Vishal from Aditya. He wants to know how AI and ML can help the existing companies acquire potential new customers and cross sell and upsell to existing customers. I think this is a question for both of you. So
Yeah, I think Gaurang is best suited given he's on the ground.
No, so I think AI is, let's keep the AI topic slightly aside because AI needs a different skill set to make it happen, right? Let's stick to ML. I think ML has a lot of potential, and I'll give you two, three clear examples, right? Understanding customer. So in Aditya Birla and like the whole mutual fund industry and insurance business, the number one problem that all of us have to solve for is redemption, right? From a business perspective, right? Anyone who builds a better redemption or lower redemption business will build a more successful business, assuming that all of us have the same thing to sell, right? Eventually, we can all say that, hey, listen, my shirt is better than yours, but eventually it's just the shirt, right? Because if both of us are selling the same passive fund or the same kind, almost the same active fund, for some time you'll be better, the sometime I'll be better, sometime Access will be better, and so on and so forth, right? So eventually, what you want to do is understand business challenges and find data that truly solve for them, right? And I think ML has a massive potential. We've invested heavily at our end to, and not just the data science part of it, the engineering part of it, right? So people, I think a lot of misconception is कि मैं data science hire कर दूंगा तो मेरा काम हो जाएगा. The real problem is that these models have to get translated into code that get translated into automation. So the way I like to call this, that you have to start the journey with design solutioning, right? So what is the problem at hand? Why do you need to solve it? What are the clear pain points, right? What are the jobs to be done? How do you intervene? So it's a design challenge combined with data and engineering. That's what you can power. And then ML is just a methodology to get there, right? It does not give you guaranteed returns also, right? Early days, we've seen otherwise, that our models have started predicting things that were actually harming us than giving us benefit. But that's a learning point, right? It's a data point into the journey, and it's a multi-year journey. And I think AI is very loosely used. I don't think there is any room for AI, in my view, from a perspective of a financial services provider. There's a different need in a partner or a solution creator, right? For example, bots need AI. In my view, bots cannot solve it with ML if there is a human conversation level to be done, right? And I don't need to build that skill or capability, but do I need to build data capability with engineering talent and with a design philosophy? That's the role that I need to play at my organization.
Absolutely makes sense. As you said, AI and ML is a lot of times confused with each other, and a lot of times it's loosely used. But yeah, it makes sense. We've seen at Signzy that how ML helps a lot of clients. I've seen it happen in a bunch of when I was not with Signzy, with another company. I've seen ML work wonders for a lot of people, especially when it came to clients, customer success, and such, right? So we got a couple of more questions. So this is something I think you would like. So from Mr. Punawala, he wants to understand developers are hardly moved into product head roles, right? According to you, how pragmatic is this? That hoping that developers would one day lead to this, heading businesses in website as such.
So actually, my experience says otherwise. I only look for product managers who have had development background, and literally almost every one of the current product head that we have was from a development background around the same. I think you cannot be a good product manager. So sorry, apology to all the MBAs. If you have an MBA, don't call yourself product managers, because honestly, you're nothing but a glorified PPT creator, right? And I'll be very, very frank in this thing, because if you do not understand how technology is driven and cannot speak the language to the developers, how are you going to translate your ideas? What you do very well is translate those ideas into PowerPoint decks, but which have very little long tail value. It has a beautiful short term value, right? Saying you can convince management about some innovative thing that you thought through, but it's actually not built from a product perspective, which sustains the life cycle, right? So you have not thought through all alternatives. You have not thought through scaling. You have not thought through how to do cost optimization when scales have come down, right? So for example, today, the volumes really come down during the last 3 months in the KYC front, and it will suddenly shoot up in the next 3 months, right? With the tax season. Now you need to think from a product manager, how do you analyze it? So my step one, do not hire product managers, especially in the biggest mistake banking professionals make is this, right? They have to have core development experience, and they have to ability to create a story, which most technical members lack, but you still have a large pool to choose from, and you have to adapt the story that you're looking for. What I'm not looking for is a great storyline. What I'm looking for is, have you thought of every other aspect from a product manager? I like to call product managers as mini CEOs. And if we are going to be tech companies, why do I want an MBA running it?
Absolutely. Absolutely.
No, I think Gaurang, you are completely on your controversial side today. So,
No.
I mean,
My apology to anybody on that context, but you have to see, you can build a skill set, right? I'm not a technical person, but if you ask me now, I have just built keen interest in the last 7 years to understand different aspects. So I hope I have not touched upon any individual that is this thing. I just wanted to be
I
very
think
frank.
we cut this piece out and put it in all channels where you said that you can't be product manager. I think this was well captured.
Absolutely. Okay. So this one is right down your lane, Ankit, and your lane. We touched it. We touched onboarding. So here's a question from Mr. Vikram. Do you see a lot of frauds now that everything is going digital? And what tools does your industry use to detect new age digital frauds?
Yeah, I think maybe I can answer that, and then I mean Gaurang. So I think mutual fund industry probably. I think this doesn't apply fully. I mean there are risks in mutual funds, but I think almost every day we are reading about payment related frauds in the news, which I personally think is extremely concerning. So I think in general in financial services we've had credit risk and identity risk, even in the physical world, that you are claiming to be someone else or there's a risk on you as a credit. I think this new fraud, right, which is a completely technical fraud, right? That I mean, somebody has figured out a technical issue in way payments can be made, and is using that OTP mechanism to kind of take away money. I think is very much equivalent to a cyber attack or a cyber hack, and that now instead of being at edge and being edge scenarios is now actually so much in our face, right? Every day in the news we are reading it. So I definitely think that we are seeing very different kind of attacks in digital world. Uh, the only I think thing that we should keep in mind is we are too early, right? So whenever you have a change of technology, whenever you have a change of how you do things, fraudsters would be first ones to exploit that change, and regulation and systems will catch up later. What I think we should be very trustful of is the fact that unlike in the physical world where a lot of frauds were people misses, whether it was genuine miss or whether it was complicity, those things I think will not happen. Once we implement something centrally, then suddenly you can stop all frauds across the country of that kind. So I think that's the good part about technology. Already I think technology is being able to do that. So I think some of the examples, of course, are, I mean, which we know is like, for example, detecting Photoshop on documents, doing face matches to reduce risk, looking at browser histories, looking at IP histories to check whether this person or this IP has been frauded before or not. And there are, I think, more and more stuff that is being done by the regulator as well, of creating digital repositories of fraud, which will, I think, also help a lot. But yeah, I think we should not be too afraid of the frauds we are seeing. I mean, this is accepted as a way to progress, that whenever you change technology you'll have frauds, and let's be confident that we'll be able to kind of build systems that counter these frauds in the next 3 to 5 years.
Absolutely, absolutely. So, okay, this one, I think last couple of years, all of us have heard of cryptocurrency. I've, regretted not putting my money on crypto when it was like really low. So this question is like really fun. So the question is here. So blockchain technology, right, has been used in cryptocurrency. But how do you think this can help in the existing financial products? For example, in case of mutual fund, is it of any help there, or is it just cryptocurrency and it would fade away? Like, what do you think?
And I'll add one more question to Gaurang. Let Gaurang answer it because I think all controversial topics should go to him. One more I would add is when would we see Indian AMC adding crypto funds?
Interesting. So both you've actually put me in a contradictory position, but okay. I see the thing is blockchain as a technology, right? Has a lot of value in the back end of things, right? So if you ask me, we as an AMC should not worry so much as a group of them, but if your camps, right, or any service provider that's collating information and not able to use this as a context of using blockchain, it has a potential to disseminate the background of it, right? So anybody in the fund administration place or in the whole RTA, as we call them, right? I think the most of the value of blockchain can be invested there. As a distributor of products, right? Eventually, the creator and distributor of product. There is not something that I can see a direct implication of using blockchain as the way to change, because it's nothing but a distributed ledger, right? So it's there is no advantage if I save your data in one way or in a distributed manner, but it has a major implication on the RTA side or the fund administration side on the same. So I think that's a separate conversation altogether. Answering your section, I think this is going to be a while, and it's not. We have never been the first, and our regulation has been very conservative, and it has a lot of advantages, right? I think India has saved itself from multiple financial crises because of its conservative and even partly very proactive regulators. We don't give enough credit to all regulators, right? And we have seen enough scandals in our generations itself, right? If not, right? So it's going to be a while, and it will take homegrown blockchains to be created, which become the norm, right? So if I see that if the central government, which is happening around the world, right? If China is talking about it, China coin and so on and so forth, there's been some, it at least murmurs at the Niti Aayog and so on and so forth, right? As we alternate the currency context, I don't see why the AMC business, because eventually you need to find a store value of it. But in the short run, I don't see that as a reason, because there are not that many homegrown. What might happen is, like, you have the international funds around the same. Somebody might come and create it, but it'll come with exceptional amount of risk, which large brands will not want to put their mind. And hence, this is a great opportunity for. So I can see one of the questions below, right? What do alternate uh, players in the ecosystem, right? Distributors or PMSs might end up creating this first, which is not a bad thing, right? Because if they built it and it's been proven, I can guarantee you all the mutual funds will go after where the money is, right? Eventually, let's be honest, that's where we all are in.
Absolutely, absolutely. So, okay, you've touched this, but let me just put it forward. How do you see the MF distribution apps and startups making money in the midterms, given their target audience's investment ticket size and the RIA fee, registered investment advisor fee, doesn't seem viable, right? So, actually, that's the question I have.
See, they also did this consciously, right? They went after giving a customer a proposition, and now they can't take it back. Now they can't say, listen, let me charge you commission, or Indians are not used to paying fees. So unlikely that model, but it's going to be interesting, right? So there'll be 3-4 methods. I truly believe Indians will start paying for micro advice, right? We like everything in a sachet. So what I might not do is, I might not have 3-hour conversation with the advisor, but I'll be willing to pay, let's say, for a WhatsApp based service that answers my basic questions, right? About advice. And I truly believe that let's say somebody offered this at 99 rupees a month, or let's say even 49 rupees a month, there will be enough takers to solve that. And if you look at it, there are only about 100 to 200 unique questions you can ask in this space. Maybe 400. It does not matter, right? Beyond that, kya puchoge? Because it's such a defined universe of things, right? So there's a beautiful opportunity in advice, but done in a sachet. There will be opportunity in, like, how everyone's becoming a brokerage house, right? And hoping that because you acquired the customer, now brokerage will make money, or PMS, right? Most of them will create a robo advisor or a small case like equivalents in their portfolio. So they will find ways, and they've used direct as a method to acquire customers, and they also very well understand it. So there is enough room for them to make money, in my view.
And actually, this is crazy. I just paid 399 to Ind Money, 399 rupees per month. They will deduct it from for this advice, and I just sent them a question: How do you set up my retirement fund? What do you do for it? That's all I asked.
Fantastic.
So, this is like crazy coincidence, but yeah. So, I mean, are you related to it by any chance?
No, not at all. But see, the thing is, eventually, Indians love everything in a small format. That's why shampoos don't sell as much as sachets do, right? It has to happen to every form. If you ask me, insurance has a bigger and much easier way to do this, and a bigger impact, if you ask me. If they're able to solve this, mutual fund wealth is slightly more emotional and a longer term decision. Insurance is fairly unemotional. It's actually contrary to that, right? It's actually to avoid emotion in the future. That's why you secure yourself.
Absolutely, absolutely. So I think that's all the questions I have. If you have any more questions, please feel free to add it in the chat. I'll be more than happy to ask it to our panelists. But yeah, I think that's about it. It was a brilliant session. Insane amount of cool coincidences. Good questions, and I love this session. We are recording this. This will be on YouTube. So most probably I'll add it to my playlist separately. But it was good listening to you, both of you. And thank you for being here.
Thank you for having us. And I hope I didn't say something exceptionally controversial. I'm just being
Absolutely. It was just fun. Absolutely not. It doesn't great.
And the controversial parts will create small snippets.
No problem.
Yeah. Thank you. Thank you guys. Thank you. Thank you everyone for being here. You guys have a good day and good night.
Bye.